where do we stand right now?
Yeah, so commodities is in the number one position, and from our last podcast, it's actually gained 16 points, and it now sits at 299. So about to break into that 300 range, which the last time, obviously, domestic equities was in there, and I think international equities crept up there at one point, but it's been a very long time since commodities has gotten up in that range. So it's big there. Domestic equities in the number two position still held there, but it did lose 9 points from the last podcast, and it's at 275. So we are starting to see a little bit of a divergence there in the 1 and 2 position. We'll see if that trend continues. In number 3 position, international equities. This had the biggest drop. It dropped 21 points from the last podcast to 189 in the 3rd position. So really starting to see that number 3 position continue to fall. And if that trend does continue, we could see it drop to 4 and see fixed income start to move up into that 3rd position. So fixed income sitting in the 4th position, it's at 144. It gained 2 points from the last podcast. And then cash in 5th gained 6 points, and it's at 115. Currencies in the 6th position gained 7 points, and it's at 71. So really, besides commodities, the biggest gains really were from the more conservative positions. And I think that does reflect the increased volatility. We've seen, obviously, the last day and 2, which you mentioned in the beginning, Brian, we've seen a little bit of a flip of that. But for the most part, the increased volatility and the trends have really skewed more towards gains coming from the conservative classes.
It's interesting, and that's reflected also by the fact that so many of the names that have brought the indexes down have been the big technology names and the large cap names that went parabolic in the 4th quarter, but the average investor, unless they had an outsized set of those positions, didn't do very well. When most stocks got their gains in for the year by basically the summer, and it was only those tech names that took off. Well, those tech names have now turned down. So there's developed a whole new group of stocks out there, Chris, as we begin the year. Let's call it the 20% plunge club. That was a phrase quoted by Jack Howe with the Wall Street Journal report. So this past week, we saw Roku plunge by about 30%. But we've since seen DraftKings, Shopify, Roblox, Spotify. Previously in this market pullback, we've seen Netflix, Teradyne, PayPal, Facebook, now Meta, and then a new name for Viacom, down 18% in a day. So we've seen a lot of names struggle, and they were just basically priced for perfection, actually overpriced, and then any sign of any trouble whatsoever, they plunge 20%. So that's the 20% plunge club. Investors are looking now for stability, and they're not sure what else they're looking for. Maybe they want a pat on the head or something like that, but they clearly don't want the high octane stocks anymore. No story stocks, just cash and stable things. So that's kind of what we've seen in the last 7 weeks, Chris.